Imagine this. The stock market, often a whirlwind of activity and emotions, took a breather on Monday. Investors seemed to hold their breath as they awaited crucial signals from two major events: the upcoming Jackson Hole Economic Symposium and a wave of earnings reports from some of the biggest retailers in the U.S. These developments could shape not only Wall Street, but also the broader economic outlook, and everyone wants to know what's coming next. On Monday, August 18th, Wall Street's three primary stock indexes, Dow Jones Industrial Average, S&P 500, and Nasdaq Composite, closed nearly unchanged. This muted performance came after a day of indecision among investors, who were clearly positioning themselves for the days ahead. Retail giants like Walmart, WMT.N, Home Depot, HDN, and Target, TGTN, are scheduled to release their quarterly results soon, offering a glimpse into how inflation and trade uncertainties are impacting consumer behavior. But here's where it gets controversial. Will these earnings confirm fears of a weakening economy, or will they surprise with resilience? That's the question keeping analysts up at night. Adding another layer of intrigue is the Federal Reserve's annual Jackson Hole Symposium, set to take place between August 21st and 23rd in Wyoming. Fed Chair Jerome Powell is expected to address the gathering, potentially shedding light on the central bank's plans for monetary policy amid rising inflation and a softening labor market. The most important event right now is Powell's speech, said Jed Ellerbrook, a portfolio manager at Argent Capital. We're all eager to hear updated insights about how the Fed views this tricky economic environment. With inflation stubbornly high and unemployment trending upward, the stakes couldn't be higher. Meanwhile, recent data has painted a mixed picture of the U.S. economy. While retail sales showed growth in line with expectations, consumer sentiment took a hit due to lingering concerns about inflation. In yet another sign of trouble brewing, the National Association of Home Builders Wells Fargo Housing Market Index dropped to its lowest level since late 2022. It's clear that challenges persist across various sectors, even as some industries show signs of recovery. Geopolitics also played a role on Monday. Talks between former President Donald Trump and Ukrainian President Volodymyr Zelensky didn't move markets significantly, though discussions about Ukraine's future remain critical. Days earlier, Trump had met with Russian President Vladimir Putin, leaving many wondering if progress toward peace might finally be within reach, or if tensions will continue to simmer. Could we see a historic meeting involving Trump, Zelensky, and Putin? In terms of individual stocks, there were winners and losers. Shares of Intel, INTCO, slid by 3.66%, following reports that the Trump administration was considering acquiring a 10% stake in the semiconductor giant, a move that raises eyebrows given the complexities of government involvement in private companies. On the flip side, Dayforce, DAYN, soared an impressive 26%, after news broke that private equity firm Thoma Bravo was exploring a deal to buy the HR software provider. And solar energy stocks such as Sunrun, RUNO, and First Solar, FSLRO, surged by double digits after the U.S. Treasury Department introduced revised federal tax subsidy rules for renewable energy projects. These regulations turned out to be less stringent than initially feared, giving investors hope for brighter prospects in the green energy sector. By the end of trading, the Dow Jones Industrial Average edged down slightly, losing 34.30 points, or 0.08%, to close at 44,911.82. Similarly, the S&P 500 dipped minimally, shedding just 0.65 points, or 0.01%, to finish at 6,449.15. Meanwhile, the Nasdaq Composite managed a modest gain, rising 6.80 points, or 0.03%, to settle at 21,629.77. Notably, advancing issues outnumbered declining ones on the New York Stock Exchange by a ratio of 1.16 to 1, reflecting a cautiously optimistic mood among traders. And this is the part most people miss. Beneath the surface calm lies a sea of uncertainty. Investors are grappling with conflicting signals, from strong corporate earnings to weak job growth, and trying to make sense of it all. Will the Fed pivot to a more accommodative stance, or will inflation force them to stay vigilant? Only time will tell. As we look ahead, consider this. What role should governments play in supporting key industries like semiconductors and renewable energy? Is the current approach enough to ensure long-term stability and innovation? Share your thoughts in the comments below. We'd love to hear your perspective.